Today we're going to be doing a clip array that's going to be Tom Lee versus Michael Saylor. Which strategy is the best one to go with? We're going to break it down. Don't miss it. I want to thank our sponsor today, and that is BTCC. This is where you guys can start trading, getting into a variety of trades that during this market are the great thing to do because you can long, you can short, create a whole slew of different strategies. Also go all the way into copy trading. This is where you can do it. BTCC. Use our link down below. Get a 10% bonus on your first time deposit, along with a slew of other benefits just by using our link. Guys, sign up now. Hit it down below. Let's go over to our first clip. This first clip is going to kind of set the stage for what happened at the Binance event. Now, there was a lot of keynotes out there. Everybody was kind of pitching their book, and everybody had a strategy. Well, Tom Lee had a very significant strategy that was different than Michael Saylor, different than Peter Schiff. We'll break it all down for you. Let's go to this first clip.
It's still hard to escape this chart. 3 of 3 times exactly called the top and the lows. But the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics, World Cup, etc. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. Let's look at the ratio of copper prices, which is measuring industrial activity, to monetary base, which is gold. You can see it had a predictable 4-year cycle, except this time. Similarly is ISM, but as you can see, the ISM is not following a 4-year cycle today. It's actually stayed below 50 for almost 3.5 years. You can see it almost perfectly explained every Bitcoin cycle, including the original Bitcoin price peak. So it's even more explanatory than the 4-year cycle. But again, this time the ISM is not peaking. I'm not in the camp that Bitcoin price has peaked. And the only way we'll know is if we make new highs in January, which is our bet. In the next 8 weeks, we're going to shatter the Bitcoin 4-year cycle.
There it is, guys. In the next 8 weeks, here we are recording this on December the 5th. 8 weeks from now, we will shatter the Bitcoin 4-year cycle facade that has been out there forever, literally. And Tom Lee goes on because now he's comparing BM&R to MicroStrategy. Take a look.
You guys think no one cares about MicroStrategy. MicroStrategy today is the 17th most traded stock, more trading volume than JP Morgan, for instance. Bitmine was created 3 months ago. It's the 39th most traded stock in America today. And we can see that here. MicroStrategy is 3.6 billion a day. Bitmine's 1.5 billion a day. And that's where MicroStrategy and Bitmine are pursuing different strategies.
All right, so I agree with Tom. What we're dealing with here is the future of ETH. The future of ETH is clearly securities, tokenized securities, RWA. Bitcoin, of course, when you look at MicroStrategy, it's locked into a certain ecosystem. I get the point that it's accelerated much faster, so I'll agree with that. I want to go to this next clip because this gets into the yield strategy that's in play right now with MicroStrategy. Take a look.
We simply raise capital at the cost of credit. The company pays out $800 million of dividends a year. What we did this week was we raised a $1.44 billion US dollar reserve, and that gives us 21 months of dividends. We did that so that we could pay the dividends without selling equities or BTC. You could think of it as we can hold our breath for 21 months. If you want investor protections, you get 9%. If you're willing to waive them, you get 12.9%.
All right, so there's the yield strategy in general. I think this is high risk because it does put a window on Bitcoin. Granted, if Tom Lee is right, Bitcoin could see all-time highs and possibly go parabolic in the next 2 years. So again, Saylor may end up on the right side of the trade again as this plays out. Now, Tom Lee is going with a different yield strategy. Listen to what he had to say.
We have Maven, our staking solution. And when it's fully implemented, we should generate about 2.9% staking yield on our Ethereum holdings. That's about $400 million a year in net income, $1.3 million a day. And it's done with a completely clean balance sheet.
All right, so as you can see, there's a couple of variations here. The exposure risk that Saylor has set up with a new instrument gives you kind of a flat rate. What Tom is doing, of course, is still exposing you to the volatility. Some people like that, but still having a yield strategy overall. So this does kind of give you some options of how you play either side of this. Michael Saylor explains a little bit more on how he came up with this yield strategy. Listen to this one.
Nobody ever created a variable rate preferred equity until we did it. The reason we were able to do it is we had digital intelligence. I designed this with AI. It never would have come to market if I didn't have AI, because the lawyers told us they'd never done it before. The bankers said, we've never done it before. Everybody else said it's never been done, it can't be done, it won't be done. And I said, well, the lawyers and the bankers say it can't be done. Can it be done? The AI said, yeah, of course it can be done. It's very straightforward. Do this and this and this. You can convince people. You just need to have a lot of intelligence on your side. So we use modern technology to develop this.
People will probably look at you're probably going to be in the comments talking about AI helped him do this crazy. This is out of control. But when you look at new innovations in the market, and I'm not defending what Saylor is doing, because it could be a train wreck starting to happen, because his bankers and lawyers are out there trying to say, hey, this is not necessarily the greatest thing to go in this direction. However, they found whatever loophole that they could to get this executed. The key here, whether he's right or he's wrong, is that we are going to see a lot of new innovations when it comes to these financial instruments. It's just going to come, guys. Some are going to win, some are going to lose. Now, I want to talk a little bit further what Michael Saylor is trying to do with this 10%, because he thinks everybody's going to go for this. Let's take a look.
What do you want? If you walk down the street and you ask 100 people, what do you want? Do you want to get 30 or 40% a year with 40 volatility? You know, between 1 and 5 say, yeah, I could put some of my money into that. But a lot of people are afraid. If you ask the average person, would you like a bank account that pays you 10%? Everybody wants that.
All right, so I mean, he has an argument, and Saylor usually does have arguments, but I think the key here is as things start to brew, well, already have brewed into tokenized treasuries, ETH is going to be the recipient of all of that. I'm just looking here quickly on tokenized treasury. We're going in to where we could be at 9 billion soon. And it's still earning significant amounts, and of course, ETH is the controlling factor right now at over almost half of this right now. And remember, guys, we did a whole video on this, on stablecoin yield strategy. You can go back and take a look at that. But there's many ways in which you can go out and earn these kinds of interest with little or no risk in reference to stablecoin yield strategy. So it's already in the market. How to compete against that, I don't know if Saylor has got the ticket for that. Now I'm going to go with a clip that basically talks about smart contracts. And it's really what Saylor is trying to do versus what Tom Lee knows can be done. Take a look.
That on a foundation of Bitcoin, we're going to see digital credit spread into every single market, and it's going to fix the banking system. The winner is the Bitcoin holder in the Bitcoin community.
The majority of this, the vast majority, is being built on Ethereum. This week, if you guys know Eric Voorhees, he was one of the original Bitcoin developers. Even he has said Ethereum has won the smart contract war. The Fusaka upgrade was completed. So again, Ethereum is increasing its capabilities.
So kind of backing up what Lee is saying there, interesting that you mentioned Eric Voorhees, because he's kind of been an OG in the space for quite some time and somewhat lined up with Bitcoin. So for him to say ETH is winning, that's a big deal. And if you look at tokenized private credit, well, it's all living on Ethereum and it's not slowing down. So I would say right now that Saylor's probably wrong on that point in essence of where growth is going to be. Now I want to go to this next clip because this is where we get on Tom Lee versus Ethereum. Take a look.
You could have said, I want to own the S&P, and you would have tripled your money. You could have bought gold or quadrupled your money. But if you bought Bitcoin 10 years ago, which is right around the time we started recommending it to Fundstrat clients, you had 112x. Outperforming Bitcoin was Ethereum, which was almost a 500 times return of your money.
So as you can see there, Tom Lee, very confident that really the better play right now, based on where we are in this market and in this kind of technology innovation that's stepping forward, is ETH, clearly is what he was pointing to. Now, I want to go to one of the other keynotes that was at this event. You guys will recognize it, but it was basically CZ versus Peter Schiff. This was Bitcoin versus gold. Listen to what CZ and Peter had to say. Take a look.
Bitcoin buys 40% fewer ounces of gold today than it did 4 years ago.
Gold did better than Bitcoin in the last 4 years.
4 years, a lot better.
How about 8 years?
No, but Here, let me finish the point that I'm making.
If you compare two assets, you can pick any random time period. One asset will
Well, I'm not random. I'm just picking the high from 4 years ago. But my point is, you have...
I have a magic box if we can get that up the stage here.
What is that?
He has a certificate, 1,000 grams, fine gold, 99.9.9.
Yes. Yeah, it's heavy.
Is it real gold or no?
Well, I don't know. I mean, is this what you're trying to say? I mean, let's see how it looks. I don't know. I mean, probably, maybe it's not real gold.
See, I want to give it to you, but I don't know if you can take it out of the country.
I can put that in my bag. No one's going to care.
You sure?
Yeah. No.
Some countries will put you in jail. So
well, if I tell them I got it from you, what do you?
Even bigger trouble. But you said that the gold is always there. How much gold is there in the world?
Well, I don't have to know exactly, but I know it's pretty scarce, and the supply grows relatively slowly.
We don't know, right? We don't know.
Well, no, I don't know how much is in the Earth's crust.
And we're so close to get you over.
I wouldn't be so sure about that.
I don't want to give the whole piece. I can give a little bit, but I can't,
Well, that's why you tokenize it.
All right, so at least they agreed on one thing, because I think Peter pretty much was getting dissed a little bit there by CZ, and they were simple questions that gold bugs have always had to answer. This is why, I don't know why Peter wasn't prepared for that. You can't transport it. The problem of fractional only goes into the blockchain, and then if you look at the authenticity side of things, well, we know, obviously, that the blockchain is a different story. So CZ, I think, won that one. If you look at what's winning right now, tokenized commodities are winning. And that, of course, is gold, and it's sitting right over there on Tether, continuing to control the market. Paxos right behind it. This is the answer for gold, and I think, if anything, Peter will probably come to realization that this is the solution for gold in the future. That might be the key to help gold get to the next level. Tom also went into where this is why ETH and Bitcoin's ratio will flip. Take a look at this one.
We got very involved with Ethereum by turning BitMine into an Ethereum treasury company because we saw this breakout coming. The Ethereum-Bitcoin ratio, we think, is also going to have a breakout. If 2025 is about tokenization, that means Ethereum's utility value should be rising. Therefore, you should watch this ratio.
All right, so keep an eye on this, because the ratio is what he is betting on based on these highs that many people would say Tom Lee's wrong. Well, the correlation has really been around the Bitcoin ETH ratio. So Tom goes on a little bit further on a price analysis here, and the key is back to this ratio, specifically what's going on with ETH and Bitcoin. Take a look what he had to say.
Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it gets to the 2021 highs, that's $22,000 for Ethereum. But if it gets to 0.25 relative to Bitcoin, that's $62,000. So I think Ethereum at 3,000, of course, is grossly undervalued.
Grossly undervalued. You saw his bear as bull in his mod case right there, all the way up into close to 65K for ETH. Now, again, this all plays into breaking the 4-year cycle, changing the ratio, and flipping into the utility side of where ETH is all going. And that's exactly what Lee has been touting for quite some time. So his analysis now is really built on one thing, and that is, how do we deal with this on the next layer? Where is the price, and should we buy now? Take a look.
Tom has advised us to dramatically slow our Ethereum purchases. And you can see our Ethereum purchases fell by half to 50,000 a week. But we've begun to buy Ethereum again. You can see last week we bought almost 100,000 ETH, twice what we did 2 weeks before. I will give you a hint. We definitely bought more than that this week.
All right, so you guys let me know if you're buying ETH right now. If you look at where ETH has been over the last few weeks, that of course is the weekly chart that we're looking at. The bounce is here because we came off of that 2,700 range, holding in right now around 3K. Let me know in the comments, is this the time that you guys are looking to come in? If you're brand new to crypto, the first thing you need to do is join our private member group, and that is the Bear Market Edge. All you have to do is click the link down below. You get in absolutely free. I send out emails multiple times a week, give you an update on the market, give you analysis. We just dropped one today that gets into what's happening in Japan, which has a big effect on crypto in general. Make sure also and follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.